We said on the previous lecture that every price represents a temporary consensus between market participants regarding the value of the cryptocurrency or any other traded asset. We also know that behind any price pattern there is a huge crowd of people who created it. These people operate as one group driven by mass psychology. Technical analysis presents those changes in people's behavior, changes in prices, volume, and indicators, which we will learn about later on. They all reflect mass psychology. The data that we get out of it is precise and objective, just like a science. But it is how we interpret it and apply our knowledge that takes some creativity and determine our level of success. The main goal here is not to invent anything new, but to learn how to identify the balance of power among market participants and then join the stronger group. Just like you wouldn't want to get in the middle of a fight between two heavyweight boxers. What would be wiser of you to do is to wait a bit, analyze, and find out who is stronger, and then ride on his back and join him. This is very essential to understand, because the crowd is like a herd of sheep. They might be wrong, and eventually most of them will be led to the slaughter, but there are still so many of them, and when they go into trend, they are much stronger than you. You need to realize and respect that, but not to fear it. The opposite is true. Because despite of their great power, their behavior is more often than not primitive, and you can quite easily predict it. To understand the grid of mass psychology, think of a strong uptrend as an auction where a bottle of water is sold in the middle of the desert. People are eager to buy it right now and at higher and higher costs. They simply don't want to miss it. As a smart individual trader, however, you need to aim to get in the market during quiet times and get out when the market is wild. This is how you make great profits. This is also why you, as a trader, must develop your own perspective of the market. Learn how to analyze the facts by yourself and be careful not to be influenced by what other people are saying or writing. Remember to base your decisions on a trading plan and predetermined money management rules. Stick to it. If you are able to do so, you will be able to get your share of money from the crowd constantly. You don't need more than that. Technical analysis assumption is that the current price reflects every piece of knowledge in the world. It is so because, as we said, the price is a consensus among all market participants, including small traders, gamblers, and also big investors and financial institutions. If someone thinks something or know anything, he would already react accordingly, buy, sell, or wait outside undecided. A good example for this is whenever there is inside information. In crypto, exactly as in other markets, there are always people who know things before others. It might be some exciting economic news, reports, maybe an upcoming purchase by a huge company. There are always people who know it first. The people that are involved, the workers, family, friends. Those people often make the easiest money. They buy, and they buy a lot long before anyone else. And they sell much higher once the announcement is already released to the wide public and there is an existing hype around it. Now, there is nothing you can do to avoid it from happening, but what you can do is to use it to your advantage. And this is the beautiful side of technical analysis. You can actually see all their early purchases because it's all reflected in the prices chart. When you learn how to recognize these actions early on, you can join them in time. If you don't do that, you might be like the crowd, buying with enthusiasm once the official news are out, and then wondering how come the price crashed instead of rising higher. This is because you can't rely on news. This information is available to anyone in the world. It's the technical analysis that lets you know about things even before anyone knows that any news are going to come out. So now we know that technical analysis is the study of mass psychology. It's a combination of science and art. Science because it utilizes proven data and mathematical formulas, and art because it keeps changing in different pace, letting us interpret and evaluate probabilities of future movements. The technical analysis relies on the fact that individual behavior is complex and hard to predict. However, group psychology is more primitive and easier to anticipate. Now we're ready to go for the next step, which is the practical use of technical analysis.